company now holds more than 600,000 Bitcoins. Join us now, Michael Saylor, the company's executive chairman. 3% of all the Bitcoins that will ever be minted, 628,791 owned by Strategy, but who's counting?
Yeah, thanks for noticing. We see Bitcoin as digital capital. The business model of the company is to accumulate the digital capital and then issue digital credit, like preferred stocks, against that digital capital in order to strip the volatility and the risk off of the Bitcoin and provide yield to investors.
Welcome back to the Daily Stack. This is not financial advice, unless your entire business model is copy Michael Saylor and never sell. In that case, NGMI or billionaire. No in between. Let's stack it.
Michael Saylor with the play, call him Captain Hotto, riding waves of Bitcoin, popping champagne bottles. Yes, looking tired, it's yesterday's news. Crypto's the future, we don't pick or lose. Digital gold, yeah, the money's so prime. Stack sats, make moves, stay ahead of the time.
Like the tie, do you have, are they all orange now? Mostly?
We only wear orange ties.
You only wear orange ties? Because I went to D.C. and didn't think about it and wore an orange tie. Every single person thought I was like advertising Bitcoin. And on, I had a picture that I put out, and on Twitter, I'm supposedly a holder. And it's dangerous to do that unless you're Michael Saylor. I'll just say that.
The future is orange, Joe.
Michael Saylor is not a CEO anymore. He's the high priest of Bitcoin, a leveraged permabull, and the man who turned a boring software company into a $20 billion Bitcoin ETF with a side hustle and spreadsheets. And if you've been in crypto for more than 30 seconds, you've seen the clips. Saylor on stage in a suit talking about thermodynamics, ancient Rome, fiat decay, and why Bitcoin is the apex predator of all money. But here's the real play. Saylor's not just talking. He's playing a long game, so aggressive, so calculated, that even hedge funds are starting to sweat. So today, we're diving into the Saylor playbook, how he's doing it, why it's working, and what it means for Bitcoin and the rest of the market, from CEO to Chad of the chain.
Are you basically just a leveraged acquirer of Bitcoin, and that's what your company is?
Here's the way to think of it. Bitcoin is a digital commodity. It's about 50 volatility, 50 ARR, and you want to hold it forever, a 50-year duration asset.
Okay.
If you want amplified Bitcoin, MSTR, the equity, is amplified Bitcoin. People want 2x Bitcoin exposure. The options jockeys love this. The derivatives traders love this. If you want structured Bitcoin, that's Strike, STRK. We give you like the 80% of the upside, and we give you 20% in a structured dividend, and then we give you principal protection. That's for people that would prefer to invest in hedge funds or S&P indexes.
Let's rewind. Michael Saylor wasn't always Bitcoin Jesus with margin. He was the CEO of MicroStrategy, a software company that nobody outside of Excel dorks heard of. Then 2020 hit. The Fed started printing like it was going out of style, and Saylor had a realization. Cash, it's garbage. Inflation is theft, and Bitcoin is the arc. So what did he do? He bet the company. He started small, bought a little Bitcoin off the balance sheet. Then he bought more. Then he issued convertible debt to buy even more. Then he literally stepped down as CEO so he could focus full time on stacking sats like a man completely possessed. That's not normal behavior. That's high conviction lunacy, and it's working. The strategy, leverage, laser eyes, and line go up.
You're using the proceeds to buy more Bitcoin. You just keep adding on to how much Bitcoin you have. And your average price is what, 73,000?
Yeah, we'll sell a credit instrument like Strike, and we'll buy Bitcoin. So we're taking the volatility and the duration and the upside for our equity investors, and we're giving a structured instrument to the credit investors.
Saylor's entire strategy boils down to a few core beliefs. 1, Bitcoin is the best asset humanity has ever created. Hard cap, digital, global, immutable. He calls it digital property. You can't dilute it, you can't seize it, you can't stop it. 2, the dollar is dying slowly, and fiat assets are melting ice cubes. If you're holding cash, he thinks you're bleeding value. If you're holding bonds, you're committing financial self-harm. 3, leverage is your friend, if you're right. Saylor doesn't just buy spot Bitcoin. He borrows against the company's stock. He issues debt and turns equity into sats. This is what makes MicroStrategy different from a Bitcoin ETF. BlackRock can't use leverage. Saylor can, and does. MicroStrategy is not a software company. Let's be clear, MicroStrategy isn't a tech company anymore. It's a Bitcoin holding company, wearing an enterprise software disguise. The business still sells BI tools and analytics products to Fortune 500s. Cool, great, whatever. But that's just the wrapper. The core value of MicroStrategy is that it's sitting on a gigantic pile of Bitcoin, acquired cheaply, aggressively, and with near religious discipline. And here's the magic trick. As Bitcoin goes up, so does the stock. But since MicroStrategy also borrows to buy more Bitcoin, the upside gets multiplied. It's like a leveraged spot ETF with an actual NASDAQ ticker.
What the company has done is we're taking this pure digital capital asset that's got a lot of performance but a lot of volatility, and we're refining it into securities that conventional investors can buy depending upon their risk tolerance and their duration interest.
Saylor figured out how to become a Bitcoin Giga whale with shareholder money, market trust, and enough charisma to make it look brilliant instead of reckless. When sell? Never. Saylor's approach is built on one rule only. Never sell. No hedging, no rebalancing, no getting cute with timing. Just buy, hold, and when it dips, buy more. He calls it the forever asset. Says he's buying for 100 years, not for the next earnings report. Is it risky? Sure. But the guy's conviction is bulletproof. He's been through 50% drawdowns, regulatory crackdowns, and Twitter threads declaring him insolvent every other week. Still here, still stacking, and every time Bitcoin recovers, Saylor's thesis gets louder and louder.
Is there ever too much Bitcoin for you to own? Like if you could own all of it, would you?
I don't think we'll get all of it. I don't think in the range of 3 to 5 or 3 to 7% is too much. BlackRock has got more than
I
us.
just wonder. I was thinking about the mental exercise of if you could actually own all of it, like if you would even, bless you, if you would want it.
Well, you know, we started and we had very little, and Bitcoin was 10,000, and now Bitcoin's more than 100,000, and 97% of the Bitcoin is worth 10 times as much, and somebody else, not us, has it.
Right.
What it means for the market. Well, Saylor isn't just making noise. He's setting the tone. Every time MicroStrategy buys, the market reacts. Every time he speaks, other CEOs take notes. He's not just bullish. He's blueprinting on how public companies can turn crypto exposure into growth strategy. And Wall Street? They're watching closely. MicroStrategy stock has now become a proxy for high-octane Bitcoin exposure. ETF inflows? Nice. Saylor's buying behavior? Market moving. He's normalizing corporate Bitcoin treasuries. He's making it safe to go full degen, but in a suit.
The big idea is I take digital capital, I issue digital credit, and a digital credit instrument can either be longer duration or it can be higher performance. We're offering 9% dividend yield with Stretch. The average money market's 4.2% dividend yield. No one would ever want to give a 9% perpetual yield in a bond that's backed by real estate or backed by gold or backed by any conventional fiat asset. But we're investing in Bitcoin, and my 20-year forecast for Bitcoin is 30% a year ARR. So it's easy for us.
The next moves? Don't expect him to slow down. As long as Bitcoin keeps making higher highs, Saylor will keep pushing the gas pedal through the floor. He's already hinted at Bitcoin-backed bonds, Bitcoin yield strategies, and potentially spinning MicroStrategy into a Bitcoin-native financial institution. He's not just a treasury strategy anymore. It's an empire-building strategy, and he's winning.
These companies like Apple and Microsoft, if they could buy the S&P index, they'd be better off. It's against SEC rules.
Right.
If they could buy each other's securities, if the Mag 7 could buy each other's securities, they would be better off. That's against SEC rules. The only security Apple can buy is Apple stock. And what do? They buy their own security. So, in general, if you're trying to create shareholder value, you don't want to park it in a fiat currency. You want to park it in a tangible asset. But gold and real estate don't make sense.
Did you ever see, we're talking
Bitcoin
about
does.
Here's the final stack. Love him or hate him, Michael Saylor is the most bullish human being on the planet. He didn't just buy Bitcoin. He bet his entire company, his reputation, and probably his sleep schedule. He talks like a philosopher, invests like a junkyard dog, and holds with diamond hands so strong they might actually be made of blockchain. You don't have to copy him, but you'd be crazy not to pay attention. Because when the next Bitcoin supercycle hits and CNBC starts asking who saw this coming, it won't be the ETF issuers. It won't be the analysts. It'll be that one guy that started buying Bitcoin at $10,000 and didn't sell at $60K, bought the dip at $30K, and is now going back in at $100K without even flinching. That's Saylor. Only ever click the official hardware link in the episode description. Skip Discord promos, Twitter DMs, or meme giveaway hypes. Your keys remain sacred. Stack smart, stack daily, and I'll see you DGens tomorrow.
Michael Saylor's game made it so supreme, building empires on a decentralized dreams.